Is Ethereum on the verge of a massive breakout, or is this just a fake out before a fall? Let's dive into the charts and see what the market is telling us. The overall feeling in the market for Ethereum is overwhelmingly bullish. There's a palpable sense of excitement, with numerous charts indicating a powerful upward move is already underway. We're seeing patterns of confirmed breakouts from long periods of consolidation, suggesting a significant shift in market structure. Many are celebrating impressive profits from recent long positions. However, with such a rapid ascent, some analysts are urging caution. They're pointing to signs that the market might be getting overextended, which could lead to a short-term pullback before any further climbs. Looking at the technicals, the bullish case is compelling. Ethereum has clearly broken out of several key patterns, including long-term trend lines and triangle formations on the daily and weekly charts. This is a classic signal that buyers have taken control. A major buying point appears to have been the successful retest of the breakout area around $2,900 to $3,000. With that level now acting as support, bullish targets are set significantly higher. Many are looking towards the $4,100 mark as the next major hurdle, with some ultra-bullish, longer-term charts even suggesting targets above $9,000. On the other hand, the primary selling point comes from indicators suggesting the asset is overbought. The Relative Strength Index, or RSI, is showing high readings, which can often precede a price correction. A potential rejection could happen around the current level of $3,400. If the price does pull back, a key buying opportunity to watch would be a retest of the major support zone between $2,900 and $3,100. A successful hold there would strengthen the bullish case. So, let's summarize the key takeaways. First, Ethereum has achieved a significant technical breakout, suggesting the bullish momentum is strong. Second, many traders are looking for this rally to continue, with initial targets sitting around the $4,000 psychological level and beyond. And third, there are valid concerns about the market being overbought in the short term, which could trigger a price correction. A key test will be whether the price can hold above the $3,000 support zone. In conclusion, the battle right now is between powerful bullish momentum and short-term exhaustion signals. The next move will likely be determined by whether buyers can maintain control and defend the recent breakout levels.